Neil, do
Hey, Kelly.
you pocket these gains or chase them from here?
Not at all. We think that the best is just to just started. To me, based on continued demand, it doesn't have to be incrementally that much higher. But the story is capacity, 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 and that's just lack thereof. You have limited LNG capacity heading out of U.S. We're about 90% full, and you have, as I think one of your frequent guests, Toby Rice of EQT, has said over and over again, the limited capacity in the U.S. of natural gas midstream is limiting what these natural gas companies can produce. So as such, you have the 5-year natural gas inventory levels now almost down to their 5-year historical lows. So the setup to me is for much higher.
The setup is much higher, Neil, and yet we've seen the energy trade fall apart the last couple months. So what do you say to all the wounded bulls out there?
Gas is held in. I think again, oil's a little bit more difficult because being such an international commodity, you can have a lot of other influences out there, what goes on. And, unfortunately, a lot of times that even some of these pure gas companies that you mentioned EQT, other two favorites of ours, Antero or Katera, both sort of get swept in there. And what investors need to remember, these are almost pure natural gas companies. Natural gas prices have held in. Natural gas prices this year have hit 14-year highs, and we don't think that's the end of it. We think we could even see a super spike potentially this winter that we would put them back to 20 or 25-year highs. So again, I get that gas price, gas stocks, as you said, have even gotten kind of swept in with the oil trade. I think investors need to sort of pull these out and look at these separately.
If we get a super spike in price of the sort you describe, where does that take the U.S. price of natural gas, and how does it lever through to the European price, where it's going to be a very hard winter?
I mean, it's already difficult. Tyler, it's a great question. I think, look, the equivalent right now in Europe is almost $70. So they're beyond what it's crazy. I mean, to say a super spike in the U.S., I would tell you I'd put it at somewhere around $12 to $15, which still sounds to me, after doing this for over 20 years, sounds crazy. But then you put that again side by side to Europe, and it's nothing. And so even when U.S. prices at $9 are hitting 14-year highs, you could tell the price. Again, Europe is, to say U.S. is constrained. I mean, Europe is just in a whole nother level beyond that. But the problem we have is the U.S. LNG right now is already at 90% capacity. It is going to expand, but it's going to expand at just a slow process as they can build these facilities. So, unless Russia somehow changes paths, again, Europe is going to stay high, and they're going to take any LNG production that we can ship them.